Hello, welcome back. We're going to go ahead and prepare the cash collection schedule for Outdoorsy Company. We said that the cash collection schedule is the largest item appearing in the cash receipts section on the cash budget. So that's why it has its own separate schedule to work through. We said the format is completely up to management, but I'll just go ahead and use the format in your book. So we of course start with our header. Let me go ahead and make a straight line for it. Alrighty, name of the company, Outdoorsies. This is our cash collections schedule. And if you remember, Outdoorsies was for the quarter ended. The first quarter, so March 31st, 2020. Okay, we said we're going to have in our cash collection schedule, we're going to have the months here at the top, the month of sale on our vertical axis there. All right, so month of sale, the amount of the sale. So that will be here, and then going across we will have our months in the quarter. So since it's the first quarter, we're going to have January, February, and March. So let's go ahead and look at the data for Outdoorsy. So this was from the handout before spring break. Item number 1 tells us the expected collection rates for the company. So it says sales for November were $391,000, December $403,000. All sales were made on account. Collections are expected to be 40% in the month of sale, 35% in the first month following the month of sale, and 25% in the second month. So like most companies, it takes 3 months or 90 days to fully collect their account receivables from their customers. Okay, so that means in January, we're still going to be collecting the prior 2 months since it takes 3 months. That is why they gave you November sales and December sales. So basically they were saying that in January, you're still collecting November sales in January and you're collecting December sales in January. How much of November sales are we collecting in January? Let's look and see. 25%. We're collecting 35% of December's in January, and whatever our January sales are, we're collecting 40%. So that's another way of kind of looking at it. Or you can prepare that little percentage schedule that we did in the last one. Alrighty, so let's go ahead and start filling this in. So we said in January, we're still going to be collecting November and December sales. Let's go ahead and put it in chronological order. So November, December, and then the 3 months for this quarter. So January, February, and March. And again, they were nice enough to give us our amounts for November and December sales. So your November was $391,000. December was $403,000. Now they did not provide you with January, February, or March sales. Why is that? Well, if you go back to the work that we did before spring break, we already prepared the sales budget for January, February, and March. So we've already calculated that figure. That's why they did not need to provide it to us again. We have already done all that work. So let's go ahead and put it in. So our January sales we calculated to be $945, February $880, and March $1,204,000. Good. All right, so it's either given or it comes from our sales budget for these amounts here. Now let's figure out how much of these sales amounts we collected in cash in the months of January, February, and March. All right, so let's start with the easy piece. In the month of sales, so in January, we collect, according to the handout, 40%. Right, 40%. We're also collecting December sales of 35%. So I'm just going to put that up there to help me do the math when I get there. You don't have to, but since this is the notes phase, that way you can look back to it and see how you got these numbers. So if you take 25% of the 391,000, you get 97,750. 35% of the 403, 141,050, and 40% of January's sales, we get 378. Okay, so in the month of January, we'll be collecting cash from January sales, December sales, November sales. All right, moving on to February. So February, in the month of sale, we will collect 40%. We're still collecting the past 2 months. We're still collecting January. Now we're in the second month, so we'll be collecting 35% of January and 25% of December. Do your math. 100,750. 35% of the 940 gives us 330,750. 40% of the 880 gives us 352. Good. So in the month of February, we'll be collecting February sales, January sales, and December sales, because it takes us 3 months to fully collect our accounts. All right, moving on to March. I think you know how this is going to go. In March, we will collect 40% of March sales, 35% of February, and 25% of January. All right, so this will be what is ever left, so 945 minus the previous 2, or 25% times the 945. We should get to 36,250. And then 35% of February, 308. 40% of the 1,204,000, 481,600. Add it all up so we can get our total cash collections. So in January, we'll be collecting 616,800. In February, 783,500. And in March, 102,550. So having that information as a manager, once I see that large cash inflow happening in March, if I can, I'm going to want to try to push my cash disbursements to March, because that's when I have a lot of cash coming in. And there is some cash disbursements that you can control, right? So for example, if we have a lot of capital expenditures that we need to purchase, talk to those operating departments. See if we can purchase it maybe not January 1st, but maybe in March, because that's when we have a lot of cash coming in, right? So maybe that's when we plan to purchase our capital assets, March or beyond, right? Also, maybe we have to pay our stockholders a dividend. Maybe we pay it in March, because according to our cash receipts, that's when we have the most cash coming in. So again, this is an example of how you can use this information for managerial planning, right? To make sure that we have enough cash to cover our disbursements. We're going to want to line it up when we know we have a lot of cash inflow to absorb all of that. All right, so that was the cash collections schedule for Outdoorsies.